Good morning, everybody. It's Tuesday, July 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 4 1/4 at 408. November soybeans were down 16 3/4 at 1022 3/4. And December Chicago wheat was down 11 1/2 at 543 3/4. Yesterday afternoon, we had crop conditions. Corn came back 68% good to excellent. That was up 1% from the previous week and above the average of 62%. Soybeans were 67% good to excellent. That's down 1% from the previous week and up 7% from the average. Winter wheat harvest, 82% completed. That was up from 76% from the previous week. And the spring wheat crop dropped 3 percentage points in the good to excellent category to 74%. Good morning, guys. We were talking a little bit before the show. It just still seems like, we're bumping into a farmer that's holding a lot of grain and they're running out of time and the weather's really good. So, Ben, maybe a few thoughts to kick us off this morning and then we'll throw it around the room.
Yeah, I think that this is the price action of the last week, 7 days, has been very emblematic of a bear market. We had a really sharp rally, 50 plus cents in soybeans, 20 cents in corn, and we quickly took all of that away. Contributing to that was August beans going into first notice day. We've seen a huge, the inverse that was there is getting down to really being gone. Tomorrow's first notice day for that. I would think that most processors domestically have coverage out till they start seeing some new beans or have some of it covered. It's the time of the year the grower is sitting on a lot of grain. There appears to be a good crop out there, and if you're watching social media, you see people still posting pictures of temperatures this week, and I think we traded that last week. So I don't see a big catalyst here. I think we just had our short covering bounce, and maybe after tomorrow, maybe old beans get a little bit of a reprieve as longs have to be out, and prior to tomorrow. So we'll see. I don't see anything really enthusiastic. Really disappointed with the fact that with massive shorts that we couldn't extend or even hold some uncertainty price wise. So doesn't feel great right now. So
no, and shipments were strong. Corn exports inspections were good. Beans were above estimates. So I guess the one bright spot on an otherwise gloomy market right now. Dustin, anything to curtail on to Ben?
I would just say I find it interesting that beans have been weaker to corn here. It's not that interesting, I guess. Like we're getting into the month of August and weather looks to be good still, but for a long time we were sticking right at the major moving averages of the ratio, and that would be the ratio of beans divided by corn. And once you get past a certain point in the year, the ratio is going to do whatever it's going to do. It really falls back to demand. Because supply is not going to change, based on price action. So we're back down to that 2.5 to 1, which is right where we've been kind of stuck to for the last, half a year. And I think a lot of that break came after Trump's election odds shot up quite a bit. And I still think we're feeling that. there's still like I think the funds are shorter beans, for a reason, and there might be some political pressure that's still on the market. But yesterday broke new lows. Today we're within pretty close to those lows again. So what happens when we start posting a 9 in front of beans? How does the market start to panic and accelerate? Is kind of a question. Getting beans back into the single digits is something we haven't dealt with in a while, and we're going right into a kind of a hot political season. So still think it's important to keep our floors under beans and keep that in mind. And just we keep talking about falling back to playing to your area. If you have really good yield potential, perhaps insurance is not going to be there like you think it's going to be for those 85% policies or less. And of course, if we have really good yields in these counties, Farm Bill in our county, might be a little bit further away than you'd expect as well. So those growers should be probably more mindful of getting a floor. If you're in an area that is a bunch of holes, drowned out spots, specifically talking about Minnesota right now, that might be a different plan. It just depends on what type of insurance you bought, what type of county policy you have. There's going to be a big difference in the strategy, in my opinion, if you're trying to stay on balance. And we still have a little bit of discovery to go. I mean, we're talking above trendline yield. Well, trendline yield is a record by 4 bushels this year. So, there's a big difference on price action in corn, in our opinion, if it's a 185 yield or a 180 yield. Both would be very large crops. But I think that you can't necessarily say, oh, we're going to go down to the 3s guaranteed with a 180 yield when globally we're still kind of tight. And the U.S. is becoming that residual supplier. So I don't want to get overly opinionated right now when we've already broken so far, but I definitely I can't disagree with what the market's telling us right now.
Anybody with anything to add to that?
Well, yeah, I would add to the bean corn ratio. I think certainly political pressure with uncertainty with how China's going to react and how what our policies are going to be. But also if you look at like the forward curve of like next year's beans versus corn, I think some of it could be, this what looks like a major drawdown in working capital in the farm sector, specifically row crop farmers, and kind of that sticky inflation, sticky cost of production number that we've talked about, where there may be more bean acres, both South America and U.S. in this kind of environment. When you have negative margins and could run into some difficulties with lending ability. So I think there could be several different reasons why beans may have been weaker over the last several weeks. At first they put in a premium because what if it's really hot and dry? We had, that kind of changed for at least a good portion of the belt. And if beans, if both crops were to receive a record yield, kind of what the government's written down or higher, beans do look more burdensome in my opinion. And we could also be looking at even more acres, South America and U.S. next year. So just kind of another take on that. And to your point, Dustin, the kind of the support prices, the support floors, via crop insurance and Farm Bill are further away on beans than they are on corn. So I think there's several factors that could be contributing to that. Now in the short run, the time of year is not our friend. We just got really good rains. A lot of people are going to be really fine tuning their crop to be, either good or really, really good, and quite undersold. So I think that could just be a huge, like we talked about yesterday, just every rally is going to have a seller in the short run, next, call it 3 to 5 weeks potentially, especially as we're cleaning up old crop, corn. So I personally think that's what we're just, the time of year is just against us, and we just don't have enough to shake any kind of a short cover rally out for more than a day or two.
Hey, Jace, what were you going to add?
I was just going to say, kind of interesting price action yesterday, right? You had beans really getting beat up early, right? And August beans down 45, corn and wheat started lower, right? Kind of right away. Wheat rallied, corn really acted pretty well, and that probably not something you'd want to see from a bear. yesterday's action closing higher. Obviously we sold off overnight. We're going to start weaker here this morning. I would think from a bearish, just the way the order flow or just the market setup, you would want corn to go test these recent lows, right? 402, 403. So just interesting price action to watch this morning, just to see, if corn doesn't test that low, if we see some short covering early here this morning, maybe there's a little follow through, right? So I think today is something to keep an eye on in corn if we're going to try to make a new leg lower, or if we've kind of built a little base here, at least short term. So
and I do think we talked about this before we came on. I think there is risk for the August Wasde in corn. We've been pretty forward thinking that corn should have lost acres to beans, and there were a lot of acres in corn and beans that were not planted as of the survey cutoff. So we'll get those updated planting numbers on the August report. So I think that still is maybe our last major risk hurdle outside of a material change in the weather. So
very good. We'll transition here quickly. We got a couple minutes before the open. Ryland, softer markets in the livestock yesterday, but there was just a small drawdown in open interest, so it didn't feel like the funds were covering too much there. But what are your thoughts?
Right. It seemed, just ostensibly, you look at a massive drop like that. You had October hogs, touching limit down at one point, and you had all this good news. You had a big belly quote kind of in the afternoon. You had a higher cutout. So, not a lot was making a lot of sense. So it did just look like pretty active liquidation. But yeah, I mean, we were only down open interest wise about 2,300 contracts in the live cattle and 2,500 in the hogs. So, it does kind of seem like maybe we're moving some positions forward. Maybe there's a little bit of a roll going on. I mean, it's the end of the month. So I think we're just kind of seeing that repositioning. It didn't look like anything really that fundamental was starting to stack up yesterday. We didn't see any cash trade on the cattle side, and cash in the hogs was actually up, almost $2 yesterday. So it just kind of felt like it was money, just kind of capital outflow at this point. So I don't think it's really going to change what's going on with the cash markets at all. We haven't seen anything develop on the cattle side of the market just yet. And last week's trade was it was $2 higher from the previous week. So we may see that trend continue. Maybe with the weakness on the board, the packer tries to capitalize on the lower board if there's going to be some more rolling of positions. But it just kind of felt like we started to see a bit of movement from the front end of the market towards Q1 for next year, at least as far as the money flow is going yesterday on the live cattle side. So something to keep an eye on. I think a lot of optimism is still going to be pushed into next year just from, the lack of herd rebuilding. So it just kind of feels like we're, the big bulls are going to stay pretty optimistic here just from a supply standpoint alone. It just doesn't seem like the higher prices are really slowing down a lot of that mentality at this point. So something to keep an eye on, but as of right now, we're still just waiting for cash to develop.
All right, very good. We will keep an eye on that, and we will talk more about how things develop tomorrow morning. If you like the show as much as we do, we enjoy doing it. Give us a like or subscribe, helps us out. Also keeps you up to speed with everything going on with AgYield, premium content that we generally put out. So doesn't cost you anything. Give us a like or a subscribe. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live at 8:15 Central. Appreciate the thoughts and comments here this morning, guys. It was a good conversation, and hope everybody has a great day, and we'll look forward to talking again tomorrow.
thank you.